Yo guys, what's up? And welcome to the trade recap of the trade that I took yesterday on the S&P 500. Overall, I was pretty bearish before market open. As you can see, we had the past few hours, the past days, consolidation after we had an extension to the upside, after we had this huge leg up, and all these wicks down here from these hourly lows, they were pretty tempting to get taken out. It's also worth to mention that we are trading all-time high region. As you can see, the S&P is like never been this high before. It's always tricky to trade the all-time highs because you don't have specific target liquidity that we can target. There are no higher highs up here in this area because we're trading all-time highs. So it's always difficult, especially when you want to long all-time highs, because you can't really know when there will be a turning point or when there will be most likely turning points. Maybe you have to work with Fibonacci levels, but yeah, overall, I was just looking for shorts, making my life easier. Also, I had some confluences that were leading me into my entry, and without further ado, let's just get right into it. So, as you should know by now, I always mark out my buy side and sell side liquidities. This time, of course, we didn't have any buy side liquidities, so I marked out my sell side liquidities, meaning all the lows down here on the hourly and on the 15-minute. And yeah, we had one 50-minute high up here that I wanted to see ideally to get taken out, but we failed to do so because the bearish sentiment was just too strong, and we just started capitulating directly after market open. So I saw first, maybe we will have this bullish fair value gap, like this huge imbalance right here, that we might fill, and then we will have an extension higher, take out these highs, and then finally move lower and take out pre-session lows. Speaking of London lows, which we had here, and yeah, so I first definitely wanted to see a liquidity sweep to the upside, but I was waiting for it, and it just didn't come. So I scaled down to the 1 minute. I was just seeing how price is behaving, and yeah, as you can see, we were just completely moving sideways, especially after market open. We had tons of breakout structures to the upside, to the downside, so it was just a mess. But overall, you can see that we were in a downtrend. Like, I think you can pretty much see it. We kept making lower highs, and lower lows the entire time. And I was watching this, and I wanted to wait for the macro time to open. So, like, speaking of 20 minutes after market open. And even after 20 minutes of market open, we still had this bearish sentiment. Like, arguably, you could have entered already right here. But I was like, these equal highs up here now that we formed are also pretty high draw of liquidity. So I wanted to see a sweep of internal liquidity of highs before I take a short. Yeah, but unfortunately, we didn't see this sweep at all. So I was just marking out first this bullish break, because first I was like maybe tempting to go long here, but I wanted to see a confluence, which was eventually this. Wait, let me just erase my entry. This bullish fair value gap tap in that I wanted to see, and I was like, okay, listen. If we get a bullish reaction out of it right now, most likely we will take out these highs that I will target up here, like these highs, if we get a bullish reaction out of it, and then we will finally move lower after we swept the internal liquidity. But if we inverse this fair value gap, I am willing to take my short entry because we are still in a downtrend. We didn't react at all after taking out these 5-minute lows right here. Wait. So we already took out these 5-minute lows, this one right here, and we already had our reaction off of this liquidity sweep. So I was just like, okay, if we inverse now this 1 minute fair value gap, I am willing to short this and I will feel comfortable and confident about it, because we are still having tons of resting liquidities down here that are just waiting to get taken out in this bearish order flow. So we inverse this gap. I entered off of this confluence. Yeah, I set my stops over these highs up here, maybe for an aggressive, more higher risk. I could have entered, I could have put my stops above this high that we formed before we inverse the gap. But I was playing it safe, and I put my stops above the all-time highs, and I was targeting all these lows that I marked out, including as my last take profit the London lows down here. And you see what happened. We moved even further past the London lows and took out all these high time frame lows right here that I also marked out. But I was completely out at London lows. But yeah, beautiful trade right here. Arguably, you could have maybe entered with more risk and put only the stops above this 1 minute high that I just showed you. Like that, but this was a bit too risky for me because we still had these low resistance highs that we formed after market open, including the high that we had before market open. So putting stops above all-time highs for me was the most safest thing. And after we hit my first take profit, of course I moved stops to break even, and then we just moved further down. This time I didn't get stopped out at break even. The bearish order flow was just too strong, and we took out all my TPs, which is pretty amazing. Was a nice trade. We had no news. Remember, we're still in a government shutdown, so most of these news are being cancelled. So be careful if you continue trading this week. It's pretty decent price action, although, but be careful because some news are being cancelled, some news are not being cancelled. So be aware of that. Try to inform yourself as much as possible before you take a trade. And yeah, I think that's it for today. Pretty clean price action, as you can see, without a liquidity sweep, just because I followed the bearish order flow and still saw my confluences. Maybe there were even more confluences, but I don't know. This is only what I wanted to see. Bearish order flow, some breaks to the downside, some inverse fair value gaps. Sometimes that's enough, you know. Only because you know so many building blocks doesn't mean that you need all of them for every single entry. Sometimes a few confluences are enough. You just need to feel confident about your entry and take it and execute it. So yeah, with that being said, I hope you guys enjoyed this trade recap. See you in the next one. Stay healthy. Peace.